Hi everyone, and welcome to the Deep South Resources Corporate Overview webinar. Deep South Resources is a copper-focused exploration and development company. Deep South trades under the symbol DSM on the TSX Venture Exchange and DSMTF on the OTCQB. Joining us today is Pierre Léveillé, President and CEO, who will go through the Deep South Resources May presentation, including an overview of current operations and upcoming milestones. Today's presentation is also available for download on the Deep South website, deepsouthresources.com, under Investor Presentations. At the end of the presentation, we will open it up for questions for Pierre to address. If you are interested in asking a question and are logged into the GoToWebinar app or web platform, you can submit your questions to us directly in the questions module. Please note, this webinar is being recorded today, Monday, May 24th, and will soon be made available on the company's website. Today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. The Deep South full disclaimer is available on slide 2 of the presentation, as you can see on the screen here. Lastly, RBMG is not a registered investment advisor or broker-dealer. For more information, please visit rbmilestone.com. It is now our pleasure to introduce to you Pierre Léveillé, President and CEO of Deep South. Pierre.
Thanks, Paul. I'm very happy to host that webinar today. What you're going to see is a very rare opportunity. It's not often that you see a project of this magnitude into an exploration company. What it is that we own 100% of a copper porphyry deposit, a large tonnage, low-grade deposit in the south of Namibia. It's about 5,000 pounds of copper at the moment, 43101. Namibia is a very low risk and mining friendly jurisdiction. We have also sections where we have identified high grades. So that's what we're drilling at the moment. We're right in the middle of a drilling program to target these high grade pods. We have a proven leadership with a lot of experience in discovering, developing, and operating tier 1 mines in Africa. One of the important factor also is that the ore of the project is amenable to the low-cost bio-assisted e-leach extraction technology. By the way, bio-e-leaching is not a new technology. It's pretty robust. It exists since over 40 years. In the copper industry, it's mainly used in Chile by major companies such as Anglo American, Codelco, BHP, Barrick, and many others. In December 2020, we have issued an updated PEA that is based on the indicated resource. So it's a 24-year open pit mine that has a capex of $340 million and a cost of operation at $1.34 per pound of copper. After tax, it turns out an NPV of $950 million US and an IRR of near 30% at $3 per pound of copper. Of course, the price of copper is a lot higher today, but I think for a sustainable period, it's most of the large companies and analysts are still using $3 or $3.25 as a basis of evaluation. Recently, we're advancing toward a feasibility study. And so this year, what you will see is that there's a drilling program going on the higher grade portion of the deposit, and you can see some results at the bottom of the pages. It's first results are pretty interesting. We will do more metallurgical work that we start now. We have announced who we have hired to produce the tests. Eventually, we will complete engineering design and environmental impact assessment to go to an eventual mining license. The company, we have 145 million shares issued with about $4 million in cash, no debt. The largest shareholders are Tech Resources with 16%, management and directors with 14%. Just a quick note on the copper market. Most of you have probably their idea on that, but it's important to keep in mind that copper is probably the commodity that has the brightest future for a long period of time. Pierre Léveillé, who is chairman emeritus of Franco-Nevada and co-founder of Franco-Nevada, recently mentioned that people have to understand that copper is the greenish commodity for the green revolution, and it will stay like this for the next 30 to 50 years, because without copper, you don't have communication, and without copper, you don't have transportation. So it becomes more and more important. And we see that there's a growing demand in China. We know that the supply is tightening up because mines are depleting at a pretty important rate. Just between 2014 and 2020, there was only 5 new copper mines that have started in the world. So you can have an idea that it's not a lot. We know that there's a lot of structural problem also that makes that the production in some countries like Chile and Peru will be hampered by more difficulties. So it's and there's not enough new project coming online to balance the supply with the demand. The demand is improving substantially. One of the important factor is the electric vehicle revolution. It's in an internal combustion engine. We have normally about 22 kilos of copper, and in a battery electric vehicle, it's 80 kilos, so 4 times more. And I'm not talking about buses, trains, vessels. There's electrification all over the the transportation spectrum. And also there's one thing that people tend to forget is that if we go more and more with electrification of vehicles, we will need a lot more charging station. And we're talking with McKinsey is expecting that by 2030 there will be a need of over 20 million charging points. So it's a lot, and that means that serious demand on copper. Just keep in mind at the moment that there's 280 million vehicles circulating in the on the street in the United States, and there's only 1 million of those vehicles that are electric. So you imagine the growth there; it's completely major. Another point that people tend to forget is that the infrastructure program coming with the the programs all around the world. Of course, USA is leading that. That will need a lot of copper. Also, it will improve the demand. But also there's crypto mining that needs a lot of power, so needs a lot of copper. There's a cloud storage, which is a very fast-growing industry that needs also a lot of copper because it needs a lot of power and needs a lot of wiring for the servers. So it's the future for copper is really bright. Namibia is, as you can see on the map, in the southern part of Africa, just neighboring South Africa. It's governed by a stable parliamentary democracy. It has an independent justice system. The transparent, surface title and mineral title are in a very transparent system. It's very easy for us to deal in a system like this. It's ranked #1 in policy perception amongst African countries, 14 globally, which is very good still globally, in the 2019 Fraser Institute of Mining Survey. Mining is a very important business in Namibia. It counts for 25% of the GDP and 50% of the exports. So based on that, you can understand that the government and social support for mining is very good. It's a very important employer in the country. And as you can see at the bottom of the presentation, there's quite a lot of mining company in Namibia, some very important that are there since a long time. And it shows that the country is pretty well developed on the mining side. It's a very large property. It's 370 square kilometers. The deposit has been discovered on 1 by 2 kilometers. So you can have an idea that there's still quite a lot of exploration that we can do over that property. As I said before, it's 5 billion pounds of copper. In the center of the deposit, We have a zone that we call the higher grade zone, and we have some intercept there up to 150 meters with 0.5 to 1% copper. So there's very good high grade pods to find probably elsewhere also on the project. The project is extremely well situated infrastructure-wise. It's right near the border of South Africa. It's 10 kilometers from the 15 kilometers from the Orange River, where we can pump and pipeline water for the operation. It's there's the main commercial road coming from Cape Town, South Africa, and crossing all Namibia, crossing our license area. It's there's a low voltage power line along that road that we can use for connection for the mining camp. For the operation itself, the extraction and the mining, we have to connect to a high voltage power grid, which is about 85 kilometers away. In our PEA, we have estimated that we pay for all the CapEx to connect to that grid. But we know that there's quite a lot of programs and development banks programs in Namibia that will support that. So at the end of the day, we should normally pay about half of that CapEx. So it will improve our PEA in a way. The couple of very important points. One is that it's a very, very sunny area. Namibia has 320 days per year in average of sun. And in that specific area near Nordover, it's 360 days in average per year. So it's extremely sunny. So you would not be surprised that we have recently hired Knight Piedzold to conduct a scoping study on the alternative power to reduce the impact of our operation cost and CapEx in connecting to these grids with the government. The other thing is that question of the water. It comes very often. We have also hired Knight Piedzold to guide us to the usage of water. What do we have to do for the permitting and so on? What is very important to understand is that this river crosses 4 countries, and the 4 countries have a deal together since many, many years. And Namibia, if I remember right, has 40% of the flow of that, of the river. So it's in cubic meters. So I don't have the exact numbers right handy, but and at the moment they're not using the full quota they have. There's 2 mines near where we are, the Rush Pina mine and Scorpion Zinc mine, that are using water also from the Orange River. So you can see that permitting is accessible to mining projects. Scorpion Zinc is shutting down because of resource depletion. So now it's another part of the quota that comes back to the government. So we don't see that as a big problem or an issue to get the water rights on the project. It's just a question of doing things properly. There's a certain number of regulatory steps to be done, and with the help of Knight Piedzold, we will be well prepared for that. On the right-hand side, you see the same picture that we have seen 2 slides ago. You see where the deposit sits. You can see it's a pretty rugged area, but where I took the picture on my back, it looks like what you're looking at the left bottom picture. It's a very long flat area that stays for over 10 kilometers going to the main road. So that's where we will have the extraction operation. You can see that on the right-hand side, the Google Earth map showing that where the operation is, where we mine the material, and then there's a conveyor belt for 4 kilometers bringing the crushed material to agglomeration and the heap leach pad, plus all the operation over there. So it's the terrain, even if the deposit is in a rugged area, we're quite lucky to have a very, very important flat area to establish most of the operation. I'm on slide 11. What you see there, first at the bottom, you see the indicated resource, which is at 0.25% cutoff. It's 457 million tons at 0.31% copper, and the 340 million tons at 0.29% for the inferred. That project came with a lot of work on it. We still have all the reports, all the data coming from mid-60s, 66,000 meters of drilling, metallurgical tests, name it. Even a feasibility study was done by Minproc in the mid-90s. We have, with Teck, we have drilled 14,000 meters between 2011 and 2015. So that's part of the 66,000 meters. On that cross section here, what you can see is that most of the drilling was done from surface down to 350 meters. Most of the companies were treating that as a classic porphyry where, or a typical porphyry where the copper is disseminated, evenly distributed in the overall deposit with grades quite similar from a place to another. So they were drilling the project to chase tonnage. So they drilled vertical spaced by 150 meters. But you can see that time to time they were hitting some good high grade material compared to the average. You can see also that we've drilled down below 350 meters, about 5 holes if I remember right. And at 850 meters, it was still mineralized. So it's open at depth. And we can see that there's higher grade patches also at depth. So there's a huge potential to increase the tonnage on that project. But another important point is that apart the 14,000 meters that we drilled in the 2010s, no one has ever assayed for moly. So we were not having any molybdenum grades, and we realized with the 14,000 meters drilling that moly is quite an interesting component in there, and it can make the copper equivalent probably 10 to 15% higher. So it would mean that when you look at the 0.31% copper, it would most probably be more of a 0.35, 0.36-ish copper equivalent. So right away there, there's a potential improvement of the grade. And the other thing which is very important, this is probably the oldest porphyry deposit in the world. It's 1.8 billion years old. It's Archean, of the Archean era. And as such, it has seen a lot more transformation and geological transformation than most of the younger porphyries that we found on the eastern edge of the Americas, from Chile to Canada. And through these transformation, what we realized 2 years ago and last year is that in these transformation, there was shearing and faulting events. And these events have remobilized the mineralization around these structures. So now we have a porphyry with high-grade structurally controlled, which is not typical. It happens. We've seen that somewhere else, but then when you have that, you have really to focus on finding these structures. So we have a series of shear zones and a series of faults that have been identified. And what we realize is that most of them tend to be vertical or subvertical. So what happened when you drill vertical spaced by 150 meters, you hit most of these structures. So we're pretty convinced that the grade of that project has been underestimated because of that fact, and because also of the fact that it was not assayed for moly. Another very important factor is the bio-leaching factor. When we took the project back alone in 2017, we knew at that point that we had to look at the project as a low-grade project, and if we want to be able to have a project, with a good margin, we needed to find a technology to extract the metal at a low capex and low opex. Looking at all the data we had in the in our database, we found 2 reports coming from Mintech in South Africa. They have done twice some tests on the orovide with bio-assisted leaching, and they were giving some very good recoveries up to 95%. So we knew we were onto something. We dug deeper into the technology, and what we realized also is that to be efficient, it's important to have a good ambient temperature, which is the case where we are. It's a very hot area, because the bacteria need that heat to be at their best efficiency. And also the fact that we have a mineralogy which is very simple. It's 98.5% chalcopyrite, 1% bornite, a very thin sheet of oxide. It does not contain any deleterious elements such as arsenic, borium, uranium. So that's very helpful for the bio-leaching. You need to have a clean mineralogy to have the best performance. The other thing which is very important also is there's a high content in pyrite, over 3%. In the last test, we're showing a little bit over 5% of pyrite. It's very important because pyrite, when it leaches, it self-generates energy, so it generates heat. It's what we call exothermic, and at the same time also it creates sulfuric acid. So it does two things. It helps keeping heat in the leaching pad, and it helps also reducing the consumption of sulfuric acid substantially. So that's a very important matter. The last important matter that I will talk today is because of its age, the rock, the granite at Hybe is a little bit softer than what we find normally in other porphyries. And the reason for that is very simple. Over time, over its very long life, the rock has transformed from volcanic to metamorphic. And as such, it makes it just a little bit softer, and enough softer to ensure that we don't need to use grinding and milling. And grinding and milling is extremely demanding on CapEx and OpEx. It's very energy demanding. So that's very good news, because we can use only a simple crushing sequence, 3 crushing sequence. And then we have the ore at about 12 millimeters. Then after that, we use high pressure grinding rollers to get the ore below 5 millimeters. That's an important factor. And that's because of the age of the deposit. So as you can see, what is very important in a project of this nature is to find the right combination of technologies with the ore to make sure that we will have the best efficiency. And that's what we find. Based on our own test that we've done last year with Mintech, we hired Mintech last year to do a test. We have tested a little bit over 1 million ton. We have sampled at the time 2 million tons. We have produced a PEA that we have updated in last December. It's for a mine life of 24 years. It's for a 20 million ton per annum throughput with an average grade at 0.31%. We use the grade of the indicated resource. Strip ratio is very low at 1.41 to 1. It starts from surface. You collect chrysocolla and malachite right at surface, and you have right immediately in the surface, in the sulfide, you have a chalcopyrite, so it's from surface. The capex, as I said before, 340 million US, and the cash cost at $1.34. When we look at the project economics, if we look at the $3 row, what you will see is that at $3 we have the after-tax NPV, as I mentioned before, 950 million US, and the after-tax IRR at 40%. Now the payback period at 23 years is a little bit long, but that's where I will show you how we can improve these economics. We're drilling at the moment with the idea of improving the grade. We've already pulled out some results that are showing that there's more high grade than what we were anticipating. I've told you also about the presence of moly, and so you imagine that if we just ramp up the 0.31% to 0.35% copper, the 4.3 years will suddenly become 3.5 years. And what it makes, it's all the economics will ramp up again. So so it does not take a lot to produce some very good economics. Just for the sake of fun, if you look at the row with $4, you see that we have an NPV at 1.6 billion US and an after-tax IRR at 42%. So imagine if we have a grade at 0.35 or higher, all of this will improve again. So how can we optimize and improve the project? First, with the drilling that we're doing at the moment. Also with the solar power potential, it could happen to be very good for the capex and opex. And also we are working on refining and optimizing the process. We're doing a flow sheet at the moment, and we're doing some tests that will potentially improve the leaching time or the cash flow that will come earlier in the process. So that we will have more news when results will become available. Now, on this map here on page 14, you see in this the map you see there is in the center of the deposit, and you can see that it's what we call the higher grade zone is divided in 4 pits that are not necessarily linked together. With the drilling that was done before, we were not certain that it was linked; they were linked together. So now, what happened when we look at the enlargement? We can see that now we know that the pit 2 extend going through pit 3 potentially. So that's a pretty good improvement, because now we know that we have high grade between pit 2 and pit 3. So these one will probably be combined together and improving the tonnage and the grade of the overall area. We will probably see the same between pit 1 and pit 2, but that remains to be tested. The drills are still on site. So that's a way also where we can improve substantially this specific area. So the ID now is target the higher grade zone. We drill up to 10,000 meters, and we would like to have a measured resource for that specific area. At the same time, we were confident that that average grade of that area will have an influence, of course, on the overall deposit. And one of the things is that what we've discovered in that area with the shear zones and the faulting could potentially be replicated on the rest of the deposit. That's something that we will have to test. It's there for future exploration. And if you can see just some of the grades that we had recently, it's like 152 meters from surface at 0.47%, including 30 meters at 0.81%. So you have an idea that we're pretty far of the 0.31% average. So that's pretty compelling. And we see quite a lot of that with grades over 40% all the time. So it's pretty encouraging and very exciting. Just to give you a little idea of what it looks like in a cross section of one of these pits, that's pit number 1. And that's there to show you what I was saying about vertical drilling and drilling incline, because that's one of the things that they were not doing. They were doing vertical, and they were missing quite a lot of these high-grade pods. There's an adit that has been dug in the 1990s, and what you see there on the right-hand side is the drilling was spaced by 50 meters, and they have hit more high-grade material. When you look on the left-hand side, you see less high-grade material because they were spaced by 50 meters. So they've missed quite a lot of good high-grade patches. But what you see also under the adit and a little bit over the adit on the right side and really below, deeper the adit, all the drills that were done incline have hit high-grade material. So they were crossing these structures. And that's what we're doing at the moment. We're drilling that specific area, pit 1, 2, and 3, and we're drilling, most of the drills that we are doing are incline. So we're pretty confident that we will get out of there with good grades and good that will add a lot of value to that project. Just a quick rundown. That's the surface of the complete license. The resource estimated is in the center where it's called HIBE. HIBE West, HIBE East, HIBE South, and Southwest are other alteration that we have started to identify. There's a little bit of drilling that I've done on some, not deep, very shallow. And we tend to see about the same material and the same type of grades than what we see in the main body. But that's lined up for really future exploration. That's potential to add tonnage, open at that surface. So in a nutshell, for year 2001, we have that 10,000 meters infill drilling program going on to define the average grade area, to estimate a measured resource over that area and increase the overall grade of the average grade of the overall deposit. We have started further metallurgical work, bio-assisted heap leaching, HPGR. There's the flow sheet optimization that generates also some tests that more information is coming now from that. We will start early next year the mining engineering design for the feasibility study. Recently, we have started also scoping studies for water usage, alternative power solution, leach pad assessment. And so all of this is running now. So what you will see between now and the end of the year is results every month, most probably up to August of drilling. The results of the bio-assisted leaching and HPGR starting probably in July and up to the end of the year. The scoping studies normally will be, we expect them in August, so there will be some news about that also. So as you can see, there's a lot of catalyst and milestone coming. And with the idea also is that in about October, we should have an updated 43-101 resource estimation. And early in 2022, on the way to the feasibility study, we will produce an updated PEA with all of the work that we're doing now, or most probably a pre-feasibility study. If we have all the data we want, we're near of being able to do that. So that would be pretty interesting if we can do the PFS early 2022, because after that we will need to drill again to complete the work for the feasibility study. So there's a good 2 years of work in front of us and pretty exciting work coming. So, management team, I suggest that you go to the website, look at the presentation, and you will see all the people that have joined us. There's only one person that is not there yet that we will add this week is Dr. Patricio Martinez, who was with Codelco Tech as a specialist for bioleaching, recently joined us as a senior advisor. And we have a very good valuation. We're pretty undervalued at the moment. A couple of good reasons for that. First, we never, Deep South itself as a listed entity, we never drilled the project ourselves, and most of the added value in projects like these are always coming out of, from drilling. But when we took over the project, there was other important things to do before going to the drilling. So the PEA first, and the resource estimation, and understanding the geology better. All of this was very important to be done, but that has kept the excitement around the company at a little bit lower. And the other thing also, we must be fair, is that when the price of copper was below $3, many investors were thinking that the grade is a bit low. It's like, but now everybody realized that the average grade of production in the world at the moment is below 0.50%. So we're not so far of that. And if it's the average grade, it means that there's other mines that are trading or producing at way below 0.30%. Cobre Panama in Panama, it's a First Quantum new project, started at about, if I remember right, 0.37% for 5 years, and then it will be 0.32%. That has helped showing the market that for the future, we will need to mine low-grade projects. So since that, the perception of the market starts to change vis-a-vis a low-grade project. So that's the most important reason why we're undervalued. So what we have to do is continue our good work on land, continue our good work with all the tests we do, and make sure that the message is known and that the company is known, and we will change that valuation. So that's about it. Thank you for attending, and I'm happy to answer any question.
Yeah, on that note, thank you, Pierre, once again. If you are interested in asking a question and are logged into the GoToWebinar app or web platform, you can submit your questions to us directly in the questions module. So Pierre, prior to this call, we've discussed some of the couple of questions that we received, and that you did go over them during the presentation. But for the person who is listening now, we would ask if he has any follow-up questions to the two following. About the water withdrawal from the Orange River. He said to his knowledge, that should be a governance problem. the Orange River flows through 4 countries. From his point of view, an international treaty between 4 countries is needed. International NGOs will probably also want to get involved, therefore probably temporal delays. Any more color, Pierre, you can add about the ratification process and the duration of the water issue?
As I explained during the presentation, there's already a treaty in place. It's not something that has to be done. So the treaty is there. So it's just to be treated by the Namibian government within their own quotas. So unless there's something that we don't know that we will discover with the scoping study of night pedal that is coming very soon, that's the information we have from the different ministries involved. So we don't see that as a major issue, but we know that it's an environmental issue also. We know that we'll have to do our studies, impact studies, of the higher standard to make sure that we can get the permitting in place. But we're not concerned about not getting the water. And there's 2 mines in the area that are using water from the Orange River. There's also some farms in the area that are using the water from the river. So it shows that it exists. There's already a treaty in place.
Thank you, Pierre. And his follow-up question, I would like to make a comparison, he said. In the north of Namibia, a major copper mine, Chudi of Weatherly, closed in January due to over-indebtedness. The copper mine should have been highly profitable at the current copper price, open pit sulfuric acid from a smelter a few kilometers away, with no water not being an issue. If the copper mine is known, where will Deep South project be better? I'm sorry, let me repeat that. If this copper mine is known, where will Deep South project be better to be realized?
I don't understand. If this project was known, it's a known project, Chudi?
Yes, if this copper mine is known, so where will Deep South project be better to be realized?
Okay, that's fine. Sorry. What is very important about Chudi, first, I'm not in the secrets of God, so I don't know all the reasons why that has closed. Yes, in the public face, it was major indebtedness of Weatherly, but what I know is that they have a certain number of critical technical problems, and one of the most important one, and that's the same with the deposits in that area. The water table is pretty high, and there was a serious problem where water was keeping flowing into the deposit, and from what I know, they have never been able to really control that water flow, and that has created very, very important problems, and that's most probably one of the major reasons why they have been increased the debt, spending money to raising money through debt to try to resolve that issue that apparently they have never been able to resolve. That's what I know from an outside perspective, from what I heard. So I cannot comment more because it's it's internal issues. I suppose there's other stuff that we don't know, and I'm not a specialist of that specific deposit. One of the things I know, when you compare, it's difficult to compare one deposit to another. But what I know here also is that we won't have that water table issue. We don't have a problem with water flowing in the deposit. It's in our case, it's you have seen it's a very dry area, so it's not an issue there. So we will continue to show that we have the right recipe to get that project to fruition, and that's it. It's we have to focus on our own project, and we know that we have what the technologies we're testing at the moment is very amenable to the ore at height. We know that we have a certain number of very good advantage to use that technology. I'm not sure about their heap leaching in the south, in the north, if they were having the same parameters than we have. But when we look at all the important factors that we need to use heap leaching technology, The temperature is important, so we tick that box because in our part of the country it's very hot. We need to have a very simple mineralogy with no deleterious element. We tick that box. I'm not sure about the mineralogy of Chudi. Was that a problem or not? I don't know. And we need also to have to be able to keep the capex and the opex low, and we will do that. We know that we have to keep the operation as much simple as we can to be profitable with a low-grade copper project. So that's what I can say in a nutshell, you know. But I'm not informed enough about the Chudi project to compare more than that.
And on the leaching process, does that also tell you that you have a lower CO2 profile than other copper producers?
That's something I would have to check. I don't have the answer, Adam, like this. I suggest the person to send me an email at info@deepsouthresources.com, and I will find the information and give it to you. But it has never been mentioned as a potential issue or a problem. So I suspect that it should be fine.
And if you wanted to start up with a smaller, higher grade operation, how would that affect startup capex?
Yeah, okay. What we need to do is very important in heap leaching. There's a lot of companies that have failed on heap leaching in the past because they have not tested the heap leaching enough. And I'll just move the slide to show you what it looks like. If you look at that slide on page 23, that's a typical, you know, heap leach recovery system. And the yellow pile that you see there, it's the gravel, let's say, that we crush and then after agglomerate, we pile that up, and that can go up to 20-meter height. So it's even more. So it gives you an idea. It's a very huge pile of rock, and if there's some blockage in there, you cannot resolve the problem. So you need to test all the way you will work to make sure that you avoid the flaws, and you need to do that at small scale. So so you need to test a lot when you do some heap leaching before starting at large scale. And the project is the following. What we propose is, after the feasibility study, we build a small pilot plant on site that will be good to produce 1,000 tons of cathode per year at a cost of 20 million US. And then we will have a small operation, and if there's some flaws, if there's some issues, we will see them at that level. So, and then after that, we will be able to ramp up to the 20 million tons per annum throughput. So it's not a question of starting smaller to generate cash flow or anything like this. It's a question of starting very small to make sure that we cover all the aspects of the project. Then after that, we can go to the $340 million into one operation, raising all the money and make the construction, or we can increase in step if we wish. And that, of course, will automatically reduce the capex, but that will reduce also the revenues and so on. So at the end of the day, it's possible the economics will be slightly affected by that. So it's preferable to do the pilot plant and then go to the large operation.
Thanks, Pierre. We have been getting a number of questions here. Does Namibia have any risks of nationalizing the major mining projects?
Never heard anything about that. And I'm doing business in Namibia since 1996. Our chairman is a Namibian, well-reputed retired lawyer, and and we have quite a lot of good connections in Namibia. So no, there's no risk of that. There's nothing that we can see. Just to give you an example, also there's a black empowerment rules in South Africa, and there's none in Namibia. There will be some at some point in time, I'm pretty sure, but they will be a lot less restrictive than what you see in South Africa. It's Namibia fully understand that they're in need of a strong and healthy mining industry, and that attracts, of course, some foreign capital in the country. So it's on that side, no, not nervous about that.
Can you talk a little bit about the security situation in the country?
It's a very quiet country. It's very secure. Of course, you know, there's always what I can call small crime, you know, thefts, and because you know there's still people that are not working. But in general, it's a very secure country. When you look at the IMF and the World Bank website, and you make a comparable with the other countries in Africa, it's always ranked number 2 as the best country to invest in Africa, with Botswana. They're very, very quiet countries. And one of the factors why it's like this, they're very large territories. It's big like the UK, and there's only 2.5 million inhabitants. So it's very sparsely populated. There's not a high density. And that's very important to keep, you know, the country as it is, a peaceful country. I'm dealing in Namibia since 1996. I lived in Namibia for 3 years. My children have started school in Namibia, and I can tell you, I can walk on any street at night, anytime, without feeling in danger.
Thank you, Pierre. That's very important, and I'm sure a lot of the listeners here would appreciate that. How much money do you need for the coming 12 to 18 months? At current low prices, issuing stock can be very dilutive. I'm a bit worried about dilution. Thank you.
Okay, we have raised about $7 million Canadian, so we still have about 4 million Canadian in bank, probably a little bit less at the end of the month. And we will need at least another $5 million in 2022 to carry on with that feasibility program. Yes, of course, it's not, you know, it's important to try to limit dilution, and we hope the next financing will be done at you know, better levels. So that's why it's important for us to do continue our good work, as I said, on the development of the project, have a very good news flow, which we will have, and do a lot of promotion, be out on the street and make sure that the story is known. One of the factor which is important is that we have started, as you know, trading on the OTCQB, but we're still not DTC eligible. And as soon as we can get the eligibility in place, which I hope it's very soon, then we will see a difference also, because we will that will allow most of the brokerage firm in the United States to trade the stock, which is not the situation at the moment. So we're pushing hard on that. That could be helpful. But yes, we will try to raise the next money at a better, you know, at a better price. Of course, we will be all happy to limit dilution. But keep in mind one thing: there will always be dilution. Without dilution, there's no development. So at some point in time, it's just for us to try to do the best to have the price, the highest price we can. And to be frank with you, we have a goal to be over $1 because we believe that it worth more than that. So that's the efforts we're doing now. We will do a lot of promotion to have the project known, the company known, and we know it worth a lot more than what we have now.
And can you tell us how much of your own money have you invested in Deep South?
At the start, it was in a private company, because Deep South has been a private company for a certain number of years. I'm probably near $400,000 US. I'm sitting on near 3 million shares. And my family around me have some also. So that's about the numbers.
And are you going to?
My chairman, just to tell you, my chairman, Mr. Coignier, has about the same investment size than me and has the same number of shares than I have.
Great addition there. Thank you. Are you going to be the developer of the mine, or are you going to sell the project to a bigger mining company?
Okay, that's an important question. Our goal is to bring that project to being a mine. So we're a small company. We have the right team to be able to develop it. But we know that if we want to be at a very large scale, at some point in time, there will be probably a presence of a major will be needed, or a large private equity fund. Our job is to make sure that we bring it to production ourselves. And if on the way, we are lucky to have a good proposal from a major company to take over the company, or the project or do a strategic investment, then fine, we will be very happy of that. And we believe that with what we're doing now, between now and the end of the year, the project will be a lot more attractive for big players like this, because there will be a lot of, the grade will be better. There will be more tests with the bioleaching. There will be more tests with other technologies surrounding that. So it will give quite a lot of value to the project, and it will render it more attractive. But we are the right team to develop it. If we are to do it alone, we can do it. But as I said, if we have some proposal on the way, no problem, we will listen.
Okay, thank you, Pierre. We have time for a couple of questions here, and I guess it's a good question to ask here. Anything you can say about the COVID situation in Namibia? How you've handled it, and next steps there?
COVID has not been too bad in Namibia. They have been extremely proactive right in March last year to close the borders, and even within the country there was 2 areas, 2 provinces that were closed. People were not traveling within the country, so they have been able to keep the infection rate pretty low, and so we didn't have any problem with the employees from Namibia. Our drilling contractor is from Namibia. It's a very good, in Namibia, it's a good mining country, so they're very good drilling contractors. So all their employees are Namibian. Most of our team also on site are Namibian, apart 2 geologists that are coming from South Africa. But South Africa's, what they have to do is take a test 72 hours before coming to Namibia to show that they're negative, and then they can go wherever they want. So it has not had too much influence on the development of the project. Where it had some influence is in North America. When we have started raising money for the project in March last year, just before the COVID situation started and the collapse in the market. So we had to postpone our fundraising, and then finally we started raising funds in September, October, and have been able to get the drilling program prepared and so on. So we have been slowed down, but outside of Namibia. But in Namibia, it was not an issue. It's still very well contained in Namibia. There's not a big rate of infection.
And we'll take one more question here. Opinion on the current price of copper?
I think it's at the place it should be, but let me tell you that I believe, and I'm not the only one, that it will be quite a lot higher. It's, as I said during the presentation, it's like there are so many factors that push the price of copper up, but the most important ones are the depletion of the mines, the actual mine, and not enough new projects that are coming in production in the next 5 to 10 years to balance out the shortage of supply. It's very important. And what we see is that, just an example is Candida, which is the first or second largest copper mine in the world. 15 years ago, we're mining at 1.76% copper. Today, they're mining at a grade of just below 0.50%. It gives you an idea of and when the grade is lower, it means that you produce less copper. And that's what happens at the moment. And there's other, structural factors that are pretty important. We see in Chile and Peru, people want to have better salaries. There's some structural problems also in the country, and that puts quite a lot of pressure on the production also. So production are going down, and there's not enough new project coming online to balance the increase in demand that is very important. So just based on that, I believe that the price of copper, which is now $4.50 per pound, I think $11,000 per ton, just near that. I think it will be at $15,000 per ton, or $6-7 per pound by 2025 easily. And copper is really at the center and even at the forefront of the green revolution. So it's if it was not that we don't have enough new projects, I would say no, price of copper is fine, but it's not the case. We don't have enough new projects. That will render a project like the Hype project very, attractive at some point in time to majors.
Thanks, Pierre, and thanks everyone for joining today's webinar that will soon be made available on the Deep South website. If you have any additional questions that have not been addressed on this webinar, please feel free to email us at deepsouth@rbmilestone.com. Again, that's deepsouth@rbmilestone.com. Thanks again, everyone. You are now free to disconnect.
Thank you. Have a nice day.